you're watching us from. For everyone who looks at price or looks at the charts, you want to find your way through price by studying price action, the keys, and studying how candlestick move, how the structure is really telling us, is it a trending profile, reversal profile, or a consolidation. So you have to identify in which stage are we in to price in order to determine the bias. So according to the position trader's mindset, how do you maneuver? So this was a request given to me by a brother of mine who told me, hey bro, help me out to see how I can do a position trade. Then he gave me the pair. This is oil. This is US oil. So I tried to break down structure by first and foremost identifying the reference points. Remember, all trades are based on these reference points. Well, that's the key in price action. Without that, there is no way you can maneuver in a successful way in order to earn from the market. You have to have a real strategy where you have a plan and also a trade plan. Without the trade plan, you have planned to fail. So that's what we are going to be looking at. So we look at the range. So we saw a decline, then an expansion, which led to the break of structure. Remember, this is the week, this is the monthly. We are looking at position trading. When we identify the range and know the profile where price is trying to go to, so we identify the current range, which is the true range we have here. So we have the low and the high, which led to the break of structure. Remember, it's a bias move. We are trending to the upside. So this is an exhaustion. So price is trying to do what price is trying to do is trying to come into the areas of interest at the discounted pricing. That is oversold conditions in the market. So we are looking at to buy low. Okay, so we are looking at to buy low at these areas of interest. So if we pull out our fibs in order to confirm which areas price is trying to go to, so if we pull out our fibs from low to high, then we see that at the 50% it's where price was consolidating. So this was the level. You see the level where price was trying to break to, but the level was holding price. Then we see the 62 where price broke lower the 62. Then we see a bounce. Then price started to go up, but going up, as we see, you have a trend line here. So we pull up the fib. It's a tool which just helps us to identify structure and how where we anticipate. Remember, where we anticipate a reversal or a bounce, break of structure, then we shift, or we see a shift in market structure that's changing direction from those deep retracement or areas of discount. So we are looking at the reference points to determine if that's the area. Remember, these areas are not black and white. Okay, these are gray areas where we hope or we anticipate price to change in order to give us that trade we are looking at for the position trading, as we are going to be breaking down structure. So if we remove the fibs to understand more, remember we have this expansion to the downside to this level, which led to the bounce, but this bounce was not strong enough to create a higher high, okay, a higher high, higher than this high. If it did create a high, it means this level will be violated. Then expect prices to come at this level, or to come higher, or to go higher. But since it failed and created a low high, okay, it created a low high, that means price is not interested in higher pricing. As we see in the trend line, price was creating low highs, low highs, low highs as it reached this level right now where we are looking at as the last area of where price is standing right now. So we see that price rejected it. It created a high low. Okay, so if it created a higher high, it means prices expected to go higher as the big players are interested in this price to push it higher. So as price is failing to create higher highs and is creating low highs, it means price is interested in low pricing. So we want to see price come at a discounted pricing, then we shall be buying it up to expand to the new leg. So we see that we have an expansion, then this is an exhaustion. So you want to break down as a position trader, what do we look for and where the position trades are we hoping to see that we get that area where price will hold, and then we see a break of structure, then a reversal, then a shift in structure, then we join the big leg, the next leg to the upside. Okay, so we shall be holding this trade for some good time, 6 months to a year. So this breakdown is to hold a trade for 6 and a full year in one trade. How many pips would you get from that? A lot of pips. Those will be pip holes, big pip holes where you will see a lot of gains. Okay, so it's what we are looking at as a position trade. How do you position yourself in order to get those big pip holes in order to earn from the market? So we see that our structure, this is a trading environment as the profile. So we have identified our areas of interest. Those are the reference points. As we have seen, there are gaps in between gaps. We have consolidation here. So we have liquidity. So all these areas, price is interested. Before it goes up, it has to pick liquidity. All high probability trades are got after a draw of liquidity. Then we see those big moves happen. So the big players will hunt liquidity, which will fuel the next move to the upside. So it's what we are trying to look at this moment. So as we see, this trend line, it helps us in order to see, is it trending? Price is not interested in higher pricing. That's why it's giving us low highs, low highs, low highs as we see. So this trend line helps us in that to identify, are there structures which are being broken to the upside? If no, it means price is interested in low pricing. If it was giving us a higher high, higher than the previous one, it means it's interested in higher pricing. But for now, as we can see, it's still in this consolidation. As that's broken out, then it's still in this consolidation. So the consolidation, remember, in a consolidation situation, we always look for high lows and low highs. So that's a concept you have to understand. So as we can see, so we need now to scale down. Remember, I told you detailing in this YouTube, we are going to be detailing why is price acting as we see it. So this is the level. Remember, this is the 50%. This is the equilibrium level. If we remember, I pulled the fibs, so it gave us equilibrium level at this area. So here it's a 50% here, and here this is the middle range. So this level is very key, very strong level. As we can see, if we go back, we see price hit the level, it acted as resistance. Here it acted as support, then it was broken out, it falsely break out, then it came back into the range. But exactly, the sellers were strong enough pushing price lower, but it closed with a big weak candle. Okay, a big weak candle, meaning the buyers came in, but the sellers are still strong enough. So what are we going to do? So we scale down to the weekly to really identify if that level is really a key level. So if we zoom in, we see that our structure is really giving us a good structure. All the levels are matching up with the weekly time frame. So we see a decline, then expansion, the true range created, then we need for exhaustion. So that's the retracement. Then we see in this area, reversal candlestick, bounce, break structure, create a pattern, then we see the buys. Okay, so we are we are good to go. We know what we are looking for. That's real price action. Understand what you're looking for. Then you go in the right side of the market. Okay. So as we can see, this is our level, our structure level here. This is the high. Okay, this is the last high. So if we look at the last high, what really happened, what inspired this price? We see price block. This was a break of structure where price broke the high. This high was taken out. Okay, so when the high is taken out, we look lower. So we identify the RTO, which led to this break of structure. So we see this is the RTO we are looking at. Okay, so this RTO is the one which led to the break of structure. So price came back. If it took out this low, it means the RTO has failed. Okay, RTO has failed to hold price. It means price is expected to go lower. So this was a false breakout, then a shift in structure, then a retracement, then continuation to the downside. So according to what we are looking at, if we zoom in carefully and we look at price, remember candles tell stories, candles trend. Everything which happens on the high time frame, it always happens on the low time frames. So we always look at the same thing. Okay, we don't change, and then here we look for another thing, we look for the same thing. So we see a swing created here. Okay, but we are seeing this is a bullish move which led to the break of this structure here. Okay, so we see it took out the previous high here. Okay, so you have to be, we are breaking down structure. Remember position trade. This we are analyzing. We want to see where we can get a trade where it will take months. Okay, months. So we are not interested in these small pips, this 20, 50, 30, over 200 something pips, 200 plus. Those are the pips you are looking for if you are to take these trades. So they always take months. If 6 months, how many pips are those? I can't anticipate that. So we are looking at structure right now. We see prices creating high, low, high, low, high, creating here, respecting this area. So we have to see what price is trying to do. What candle? What candle is it? Is it a high candle or a low candle? So we have to see. Even candles, I told you, tell stories. So if you understand candlestick stories, you are good to go. You are a class apart in order to determine structure, the reference point, to add all the puzzle together in order to see and identify how price is acting or reacting at certain areas of interest. So we see these are liquidity areas. So this was a low, a lower low, then a high low, created a high low, high low, then created a high low. You see, price is trying to create, rejecting low levels. Okay, low levels are being rejected, as we can see. Low levels. Okay, price is not interested in low pricing, so it would create a lower low. Then we are expecting low pricing, but price is no longer interested in going lower. So we see that in price action itself, when you look at the lows and also look at the highs, so you know where pricing is trying to go to. So you want to see price come back to these areas. Remember, this is the opening price. So if price is selling, so you want price to sell, then come to this area, then we see a bounce, break of structure, pull back, create a pattern, then we see those buys. So on the weekly, it's clear that we are looking for short-term sell. Okay, a short-term sell, then we see a buy if these levels hold. Okay, so if this level holds price, remember we are looking at this low. Okay, because this is the swing, we're looking at this swing low. If it holds price, then we expect high prices. So if it's broken, so we wait, is it a false breakout or a valid breakout? A false breakout, a valid one will break out, then retest the level, then leave the level. Okay, then come back to the level, then hold again. then we see low pricing. If it's a false breakout, it may come and break out, but come back and close back into the range. Okay, then we see continuation to the upside. Okay, so it would have given us a reversal in this area. Then we see pricing at the higher levels. So if we go to the daily, this is oil, my friend. This is oil. So oil has a good price action, very good price action. As we can see, this is the daily. The daily is quite clear. As we can see, it's quite clear. So as we saw, this was structure broken. So price is respecting the lows, the RTO area. As we can see, price is really respecting. It gave a bounce, then it came back to structure. It failed, then it's trying to go lower. So if we zoom in to this area to really understand what's really price is trying to do, so we see the high is here. So it created a swing, waited lower, it bounced, came back, it failed to create a high. So these are the things we look for in consolidation. We always look for low highs in consolidation, low highs and high lows. That's key. So here we look at the high low. Okay, sorry, the low high. It's a low high. Okay, it's a low high. This is a higher high, then a low high. This is a lower low. Okay, lower than this one, the lower low. Then we create a high low. If it comes back here, created a high low, then continuation. So we see price is expanding to this area. So this area is where we are scanning. Is this a low high in price, or price will come back to this area? So we are seeing it's still bullish. It's giving us a bullish momentum to the upside. So we are interested in that bullish momentum. But remember, we are looking to sell this market because price is no longer interested in higher pricing. As we can see, it's no longer interested. Okay, it's no longer interested because it's creating low highs. Because it's creating low highs, that's the signal. If now it comes back and takes out this low high, create a higher high, okay, that means it's interested in low pricing. So according to what we are looking at, we see that price is clear. The intention of price is not going higher at this moment. It wants to go lower. Remember, this is our last objective. Okay, this is our level of interest. So here we are looking to buy. Remember, we buy low and sell high. So this is the range. Okay, so if we pull out our fib to confirm that where exactly we are trying to, so we see that price is still at the 50% and 62. Okay, so you want it at deep retracement at the 79. Okay, RTO area. So at this area, we want to see a discounted pricing buy, then we expect price to go higher. If it fails to hold, it means price wants to break lower, then either giving us a false breakout or a valid breakout. So you have to understand where we are into price, then we will get the right bias in the market and will earn. Okay, and you earn from the trading itself. So you have to understand what you're looking at. You have to understand where you are in price. You have to understand the range you are looking at. Where is the range? As we see, this was structure break. So this is the range, true range. So we identify the range, then we see this is the consolidation, which expansion broke out, then falsely, then came back into the range. So you're expecting low pricing. So at the daily, we look at this position trade. Now at the daily, we are looking at this candle, the next Monday candle opening, how it will expand. You want to see rejections, then close lower. That's the signal. If it does that, then we shall be looking at the low time frames. Now we shall scale down after tomorrow's Monday candle close, then we shall be looking at the H4. The H4 will give us also the same thing. So at the H4, we are looking at those areas which are not seen on the high time frame. That's the daily. So on, and then we scale to the H1, which will be our trigger and entry point. Okay, the H1. So at the H1, we want to see price reject the level, break structure, then create a pattern in between after breaking structure lower. Remember, breaking structure is key. Breaking structure lower, then we see a pattern at this area or inside this range. Okay, so we sell the price. So that's how we are looking at price. Okay, that's how we are looking at price. It's very easy, just being patient, being principled, and having a trade plan and following it accurately. And you see, triggering emotions that will happen, but if you have a trading plan and really you have tested it, back tested and forward testing, so it will not be a hurdle for you. So you will see price as is you have to see it. So if now we pull out our fib on our entry time frame, that's the 1 hour time frame. This is the 1 hour, that's the 60 minutes time frame. So we see prices at the 79 already. It's a discounted pricing. So when it comes back here, then we see rejections and structure break lower. That will be the trigger for our next trade lower. Okay, so that's it for the oil. So you comment below for any pair you wish me to break down. So it will be my pleasure for me to do so. So we shall be understanding and breaking down structure to its core best. Okay, pure price action and using horizontal lines, using also by the aid of the trend lines just to show us structure. So price is trying to break lower or break higher. So we do it in a professional way, as we can see, to easy up the game in order for us also to earn from this market, as it's a big market for everyone, so everyone can earn, can eat the little you can get, then you call it a day. So that's it for me from today. So you comment and like, share, it will be grateful. The only thing you can give me is that. So hopefully see you for the next session. Yep.